Good evening. Now we have already discussed acceptable income from investment, right? Acceptable income from investment. That is excuse me. So we have already covered acceptable income from business as well as acceptable income from investment. Today I am going to discuss the acceptable income from other sources as well as taxable income. Right? Once we discuss this topic, so thereafter we can compute the tax liability for a company. This I am focusing tax liability of a dividend company, and thereafter we'll start the discussion on tax liability on the non-resident person. That is the main area, but I want to discuss with you. Right? So, as we discussed, as the person's income from other sources for a year of assessment can be the person's gains and profit from any sources, but from the year, not including profits of a casual and non-recurring nature. So you know that any income, what we are considering, first we have to check whether it is coming under the employment income. So if that features are there on the particular income, so then we have to work out that particular income under the provision of the related to the employment income. If not, then we have to check whether it has some attribute of the business income, right? So if not, then we have to check whether it has some characteristic of investment income. If not, then we have to check whether it is falling under the other source. Right? This is general the room given for the tax for the legislator to cover the other income, right? So, but most of income, what we are discussing in day-to-day language, it covered by either employment, business, or investment. Right? If any chance somebody wants to escape by putting interpreting a different way, so then this part has been, address that type of situation, right? So as I said, any source whatsoever for a year, not including profit from a casual and non-recurring nature. That means other income sources means other than casual and non-recurring. Any other income other than casual and non-recurring. So then we should know what is casual. So of course that exam income and financial storing amount we are not considering here, because then we have worked out that any accessible income. The accessible income from any source, exam amount we have to remove. As well as financial storing amount we have to remove. Why? So we are working out here taxable income. Right? So what is the nature of casual income? So in this concept of income, right, refer to unexpected gain. This is unexpected gain. That is casual. It includes things like gains of price, crossword puzzles, price winning from knowledge competition or other similar windfalls. So it's just like it's a chance. Because of the chance, we are getting income. Those are under the casual nature. So remember, the casual nature income is not coming under the other source of income. That's what it means. Right? Casual nature income is not coming under the other source of income. Right? So you know that what is that in knowledge competition, just like actually somebody received a prize. Right? It is casual nature. So very rare chance you need to get that thing. Right? So just like luck. Right? So that particular income is not coming under the either employment income, because there is no employment attributes. It's not coming under the business, it's not a business, and also not coming under the investment. But remember, winning from a lottery coming under the investment income. When we discuss the investment income stage, winning from a lottery, gaming or betting, that is coming under the investment income. Right? Other than that type of thing, so game show prices, right? Crossword puzzle, that type of thing. If somebody is getting some sort of winning, that is in the nature of casual. Therefore, it is not coming under the other source of income. Remember, we discuss other two parts. The main source of income, which is business and investment. So difference between this section and that other two sections that we discussed, it says previous section says it includes. Here it says other than. But these things are excluded. If anything other than these two is coming under the other source. That's the mean. Remember, right? Nature of this type of gains are unexpected. That is the attribute of the casual nature. Casual income represents an extra financial goods that cannot be relied upon as a steady stream of revenue. It is a one-time occurrence defined established patterns of distribution. Right. So as I told you, it's a very rare chance to get receipt. So that type of thing we can recognize as casual nature. Again, I am repeating, the casual nature income is not falling under the other source of income for income tax purpose, right? Because section very clearly mentions that any for not including profits for profit of a casual nature and non-recurring nature, right? So then what is non-recurring? So you know that, right? When we discuss that what is the business income, one feature or the barriers of the trade is possibility of recurrence, repetitivity, right? If it is a repetitive nature and there is a business motive, it is more like coming under the business income. He also says non-recurring income as gains that are named part of ongoing cooperation. So, and accelerate reflection of future performance. Compensation for victims who adverse capital by war. And that's the landmark case. So, that case law, it says one person who received, who got some sort of gain by dismantling of some building structure. What was happened during that war season? Forces have acquired some land and they put up their building to keep their vehicles or the boat or that type of thing. That is war, the instrument they are using for the war purpose. After the after the war, they have handed over the land to the real owner. And owner with another person has disposed that building structure, the metal structure which the army has put established or the construction of her building or her land. On that, they are getting some sort of income, and so the actually that time the country under the Queen control of the Queen. So so that decision has given in favor of the taxpayer. It says there is no repetitive nature. Therefore, it cannot be considered business income. Right? There should be a repetitive nature in case of the business. Right? So even they have obtained a gain, they work towards to get some sort of compensation for the gain, but there is no repetitive nature, therefore it is not coming under the trade income. So very phenomena, they are in case of the trades, it should be repetitive nature. So here also it says that if there is no chance to recover, so that type of thing also not coming under the other source of income as well. Right? Anyway, there is chance to, you can see in some cases where some person has done only one transaction, but it doesn't say there is a chance to recurrence. Right? Some will discuss that as one person who worked as an arbitrator for a settlement of some case. One case. Actually, he has done only one case for that particular year, and he got some income. He has disclosed that income as it is not happening again. Right? But the court give a decision in favor of the tax authority, is say that if the decision stated very clearly that yeah, that's correct because that person has done only one transaction during the period. It doesn't mean he cannot do another transaction, right? There is a chance to recurrence. There is a possibility recurrence. He can act as another in other case and get some fee income, right? Therefore, that court decide that it is also coming under the professional income or the trade business professional vocation at that time. Now, in current law, it says coming under the business income, right? In the business income, there are three parts: trade, professional, vocation. It is coming under the professional income, so therefore it is coming under business income. So that is a very important factor. Court has mentioned that, yeah, if that particular person is, as we show whatever thing, he has not entered, but there is a chance to recover. There is a possibility, high possibility of recurrence of that particular transaction. Therefore, the first, the important point in case of the business is what is recurrent. So if it is recurrent, then it is coming under, most probably coming under this. Other factors are there. So here also, so others also doesn't include non-recurring income. The same case I have put it in a very summary way that go with them, so you will they receive some sort of compensation. But that, it's very rare chance to recurrence of that type of. Again, there should be a company, and there should be a O and some big thing, and thereafter there should be a compensation. If it is the case, then it is received. There is very rare chance, and therefore it is not coming under the other source of income. So remember, under the other source of income, any other thing other than casual and non-recurring, that could be coming under the other source of income. Okay, casual and non-recurring. So because other three, but the source of income extensively discuss all the area what they can cover. The legislator can cover. Employment income, then contract, or I'm rendering a service, then most probably it is coming under the employment income. Right? If there is any contract where I have the control over the contract and I can render a service, it is coming under either profession or vocation. Then it is coming under the business income. If there is trade nature, then it is coming under the business income. Right? If I am doing some sort of investment which is in some sort of integrated fashion and I'm getting income, basically passive income, it is coming under the investment income. Game or the gain. Getting under winning from lottery also coming under the investment income. Somebody can do as a business asset, right? You know that in casino and all those things, they are doing as a business. Development lottery board is doing as a business. That is their business, right? So other than these three, if there is any income which is not nature of the casual and non-recurring, that could be coming under the other source of income. Right? That day we discussed. So if I am telling my private vehicle which I have used for my private purpose, somebody told that it could be coming under other income. Yeah, there is a chance because it can be happen again, and also may not be, right? But it's very debatable. That type of thing can come under the other income, right? Remember, so any income which is coming under the business income, so we have a chance to deduct some expenditure, right? Any income which is coming under the investment income, there may be chance to deduct any expenditure. But in case of the employment income as well as other income, there is no chance to deduct expenditure. Right? So again we can work out if there is gain, but very difficult to be to deduct expenditure because section or the 5 or whatever employment income 6 and 7, they are discussing in detail how to work out that particular income source. Right? What should be in case of the employment income says what should be included, what should be excluded as well. There is some sort of income which even it is coming under the employment income, it is not. We need not to consider when we work out the simple income. Right? The business income also same. But what are the things we need to consider? It's very clearly mentioned. And investment income also same. Here it says Other than casual and non-recurring nature income, we should be having another other income. Right? I didn't see any past papers or whatever thing. There is other source of income. Even in practical scenarios, very difficult to figure out what is the other source of income. Because actually, when the law is finalizing, somebody asked that what is the other source of income. Not necessary to keep, because anyhow, other three sources cover almost all the income. Right? Right. So with that understanding, we will move that. So thereafter taxable income. Now all four sources of income you should know. And the employment income, I think you have covered in the previous level, right? And business income and investment income we have discussed in very detailed way. Next day I am planning to do another question in the classroom, right? As an example, how to work out the tax liability of a resident company, right? Therefore, be ready for that one, and you follow all the discussion what we have done, right? So come with that knowledge, right? Right. So then taxable income. Section 3 says taxable. Here of the income act says taxable income of a person for a year of assessment can be equal to the total of the person's assessable income. So taxable income equal to assessable income, but it says thereafter of the person's assessable income for the year from each employment, business, investment, and other sources. All sources they are discussed, right? Aggregate of employment, business, investment, and other sources. Assessable income from that sources are equal to the taxable income. Thereafter it says in arriving at the taxable income, right? Subject to section 2, subsection section 3, subsection 2 says these things can be deducted. Right? In arriving at taxable income of a year of assessment, qualifying payment and relief. For that year, under section 52 shall be deducted. So only two things we can deduct when we arrive at taxable income. What is that? Qualifying payment and relief. Remember, only two items we can deduct from the assessable income when we work out the taxable income, that is qualifying payment and relief. Right? Remember, qualifying payment and relief can be deducted. Therefore, if anything coming under the assessable income is coming to the taxable income, remember that, right? So once we work out the assessable income, we can deduct any income, right? We can deduct only two things, that is qualifying payment and relief, right? So why is very clear? Qualifying payment and relief we can, right? So that's not. When we work on the assessable income, if there is any exempt amount, we have to remove from the assessable income. Right? Excluded thing we have to remove from the assessable income. Final installment payment we have to remove from the assessable income. Why we are working on the taxable income? I am again telling that when we discuss the section 2, I told you section 2. I told that is as per the section 2. It says in Sri Lanka, persons is liable for income tax only if he having a taxable income or final withholding receipt. Right? Receipt of final withholding payment. So here we are going to work out the taxable income. So before we work out the taxable income, we have to work out the assessable income. Before we have to recognize the assessable income, we have to recognize the source of income. Right? So then there are four sources. Once we work out the sources of income, and the assessable income from each sources separately, and thereafter that is called total assessable income. From that total assessable income, we can deduct two items, that is qualifying payment and relief. In a question, you cannot deduct, or practically you cannot deduct any other thing other than these two from the assessable income. Remember, right? So it says qualifying payment, just like payment. Qualifying payment, some payment which is qualified for deduction. We call qualifying payment. That is as per law. Law says these payments are qualified to deduct, entitled to deduct. So that is also payment. So more or like it is what is payment means just like expenditure, some expenditure, right? And relief. Relief also given some sort of concession. right? Relief means just like concession. That too we can deduct. Okay. So the taxable income of each person can be determined separately. So I told you when we are discussing the assessable income as well as taxable income from each source we need to work out separately, as well as taxable income for each person need to be worked out separately. Right? Right. So then this is the slide we have discussed at that time also. Assessable income from employment, assessable income from business, assessable income from investment, assessable income from other sources. Right. Now we know how to work out this thing. We call aggregate of this whole source of income. We call total assessable income. From that we can deduct qualifying payment and relief. That's as per section 52. Right. You need not write the section, but remember qualifying payment and relief we can deduct. Right. Once we deduct the qualified payment and relief, we call it as taxable income. Right? So on taxable income, we have to just apply the tax rate and work out the tax rate. Simple. Okay. So then income. If then income, we have to check whether what is the source. So employment, business, investment, or other. So accordingly, we can work out assessable income. So then excluded thing as per the respective section. So we can remove, and exempt amount we have to remove, and final withholding payment we have to remove. And we have to remove then taxable income. From that taxable income we can deduct qualifying payment and relief. So then I have summarized the all the exempted amount or the exempted income which related to business income and investment income basically. I didn't take much weight on the employment income. I assume that you know that, right? So then under the investment income, what are the exempt amount? Gains made on realization of an asset consisting of shares quoted in any official list published by any stock exchange licensed by Securities and Exchange Commission of Sri Lanka. Right? That is gain. Right? This is coming under the investment income. Gain made on the realization of assets. An asset consists of shares. That means simply if I put in there, any person who dispose share, which is this share, quoted share, right? Quoted share, it is exempt from tax, right? Exempt from tax, exempt from income tax, right? So share, it is coming under the what type of asset? Now tell me in the tax term, what is the share coming under which asset? It is capital asset, right? Capital asset, under that says membership of a company. That is share. So here it says share quoted shares. So put it in a summary, disposal gain on quoted share, which is exempt from income tax, but it is subject to share transaction levy. That is one reason, 0.3%. On the each selling and the buying, both buyer and the seller is liable to pay share transaction levy, and it is recovered by the respective broker. Share broker is recovering when the transaction is happening then and there. The Securities and Exchange Commission, they are sending that money to the Commission General within 3 days after the closing of that contract, working days, right? So therefore, no income tax. No income tax. Even it is coming under the disposal gain on the investment asset, it is not liable for tax. So when if there is type of thing in the received by the person, we can remove when we work out the investment, right? So therefore, what is the tax point of view? What type of tax on the disposal charge? It is basically capital gain, right? Capital gain. So then capital gain also exempt on disposal of quoted share. Interest accruing to or derived by, this is interest. Any person outside Sri Lanka on any loan granted to any person in Sri Lanka. Right? Interest received by a person outside Sri Lanka who is not a Sri Lanka, or the foreigner or the non-resident person. Putting in that way, interest income received by a non-resident person on a loan granted to any person in Sri Lanka. Right? It is exempt from income. Right? So then we are making any interest payment outside Sri Lanka, then no withholding tax also. Right? No withholding tax. Right? You know. So one reason is why Sri Lanka has borrowed so much of money from outside persons, right? Even including IMF. If it is subject to withholding tax at 5% on interest normally liable to withhold 5%. So if we are making that particular interest also, we have to deduct 5%. So then nobody is giving loans to us, right? So I don't know what the real case, but anyway, even if any person who is getting interest income from a loan which granted to Sri Lanka, that particular person is exempt from income tax. That particular person is outside Sri Lanka, right? So interest to a non-resident person on loan given to Sri Lanka and interest to non-resident on investment on treasury bill for the board. That is also exempt because treasury bill and bonds, that is also considered as loan given to Sri Lanka government, right? So therefore, it is also exempt because there is a ruling given by the Commissioner General. Under that ruling, it specifically mentioned treasury bond and bills also. Because treasury bond and bills, it's not subject to withholding tax. Only bank interest or the financial institution on that deposit, they are making an interest payment, they are deducting 5% withholding tax. Right? Treasury bill and bonds is not subject to withholding tax, even that is there, but that investment is made by an non-resident person, the interest income is not subject to withholding tax. Right? Any person on money lent is paid in foreign currency in any foreign currency account opened by him or on his behalf in any commercial bank or in any specialized bank with the approval of Central Bank of Sri Lanka. So basically, you know that exporters and somebody just like somebody they can open a foreign currency account in a commercial bank in Sri Lanka or specialized licensed specialized bank. So I mean, all of we cannot open a foreign currency account. They should have foreign income source. If it is the case, we can open a foreign currency account. Otherwise, there is no possibility to open a foreign currency account, right? So that is, we are opening. Somebody is having that type of account. We are getting, that person is getting that interest income on that type of investment, or the bank account, or the saving income, whatever that particular interest is exempted from income. Right? Interest basically is coming under the investment income, one component of investment income that is not subject to withholding tax, right? You know that RFC and NRFC account, resident foreign currency account, non-resident foreign currency account, right? Is that account coming in here? Any person from a term deposit account, cycle as specialized deposit account, open and maintain with the authorized dealers in Sri Lanka, excluding the subsequently renewed account, either in any designated foreign currency or in Sri Lanka rupee. That is also exempt. Any welfare society shall not be a partnership of company. That is also interest by any welfare society also exempt. Any multinational company on any deposit open and maintained foreign currency in any domestic bank, if such deposit is maintained to cover its import expenditure. That is for the remaining multinational entity, right? So any prize received by a person as an award made by the president of the Republic of Sri Lanka or by the government in recognition of an invention created or any research undertaken by such person. So that type of prize should be priced from Sri Lanka government on as a reward for the invention creator or research finding. Right? That type of thing is not tax or it is exempt from income tax. Any sum received by any person from the president fund. Right? That is also exempted. Any income earned by a any non-resident person other than a Sri Lankan permanent establishment, right? By way of interest, discount, or realization of any gains or any sovereign bonds on any sovereign bonds denominated in local or foreign currency, right? Sri Lankan sovereign bond. Any non-resident person who invested in Sri Lankan sovereign bond, so that is also exempted. Any person buy of interest on discount paid or allowed as the case may be on any sovereign bonds denominated in foreign currency, including Sri Lanka development bonds. So that is also exempt. Gain from the realization of international sovereign bonds issued by on behalf of the government of Sri Lanka and received or derived by a commercial bank or authorized dealer who made an aggregate investment of less than 100 in such bond. Interest or discount accrued or derived by any sum of the community based bank from security or treasury bond. Any amount derived by a premium system from an annuity for life for a period of not less than 10 years, purchased from a bank or an insurance company. These are anyway that interest payment to non-resident person anyway exempt. So these things, I mean the previous that was there. Here, any amount derived by a senior citizen from an annuity for life. You know that some insurance company or some financial institution introducing wealth plan. On that, they have to purchase and they are getting some sort of income thereafter. Right? After actually, senior citizen person who reached to 60 years. So, it just like annually or some sort of fixed amount they are getting. So that is also exempt, but the period should be more than 10 years. Right? Any winning from a lottery, the gross amount of which does not exceed rupees 500,000. Lottery winning reward up to 500,000 is tax exempted. That is for anybody. Right? In real case scenario, this is applicable to the individual. The companies, they are not going to purchase lotteries, right? Dividends paid by a resident company which is engaged in any one of more of the following business in accordance with the provision of the Finance Act. That is actually there is another act, Finance Act. It is not. It is. There are some taxes they are introducing under the Finance Act also, just like tourism development act. So, share transaction levy actually coming under that, telecommunication levy. Likewise, some taxes introduced under the Finance Act. The Finance Act gives some sort of relief for investment, this type of investment. Right? So this is coming under hub operation. Right? Previously, we had another. The legislature has issued a gazette notification that is for the hub operation. Under that hub operation, if somebody is getting dividend, that is also exempt. Export trade is only import, minor processing and re-export. Offshore business where goods can be procured from one country or manufactured in one country and shipped to another country without link to Sri Lanka. That is called offshore business. Front-end services. Headquarters operation of leading buyers for managing of financial supply chain or billing operation. Logistics services including water warehouse also multi-country consolidation in Sri Lanka. That type of thing coming under sub operation. From that operation, if somebody is declaring dividend, that particular dividend also tax exempt. Right? So first thing is coming under the Finance Act, and also it is covered by the BOI also. That undertaking should be registered as BOI. dividend paid to a member to the extent that such dividend payment is attributed to or derived from another dividend received by that resident company or another resident company. Dividend payment by a resident company out of dividend income. That is it. Right? Dividend paid by a resident company from the receipt of dividend. That particular dividend, the redistribution of dividend is exempt from the recipient. Right? Remember, this is important. Redistribution of dividend. Right? If the dividend paid to a member to the extent that such dividend payment is attributable or derived from another dividend received. Remember, not only dividend from Sri Lanka, even some company they are receiving dividend from outside Sri Lanka. On the investment they made outside Sri Lanka. That particular dividend is anyway, right? And if that redistribution at the same dividend, it is also exempt in the hands of the shareholder. Dividend from and gain on the realization of shares in a non-resident company. They are derived by any person with respect to substantial portion in the non-resident company. That is given to the resident person who is making an investment of non-resident company or the company outside Sri Lanka. So, dividend received or the gains from the realization of shares. Right? If there is a substantial participation, here substantial participation means only 10% or more of the value of the share in the company, including redeemable share. So, there is control either directly or indirectly of 10% or more of the voting power in the company. If the case, that particular dividend for the gain, both are exempt. Right? Dividend paid to a member who is the non-resident person, their such dividend is paid prior to 1st January 23. Any amount derived by a person from the sale of any gem on which that has been deducted, that is also exempt. Sale of gem subject to income tax at 2.5%. So that income also exempt. Right? Interest attained or derived by a charitable institution. They are proved that to the satisfaction of the concerned level that such interest is applied solely for the purpose of providing care to children, the elderly, or the disabled in a home maintained by such charitable institution. So, charitable institution basically, you know that under the definition, charitable institution also coming in the category of person. Right? If the charitable institution has taxable income or final electronic payment, so then they are liable for tax in Sri Lanka. But it says interest to charitable institution, if they are proving that particular interest income is used for the charity purpose, then that interest also exempt. Say, you know that some children home or the orphanage, they are getting donation, they are receiving donation. They can keep that donation and deposit in a bank. Right? From that interest, they can maintain the children home or whatever. So then, that particular interest income, they can claim tax exemption. Right? Any amount derived by any non-resident person as any payment for aircraft, software license, or as or other related services from the Sri Lankan Airlines. Amount derived by a non-resident person from engaging in a project of government of Sri Lanka, if such project is approved by the ministry. This is actually coming under the business income. So these exemptions are coming under the business income, right? Business income exemption for business income. The gains and profit earned or derived by any person from any services rendered in or outside Sri Lanka to any person to be utilized outside Sri Lanka, where the payment for such services is received in foreign currency and remitted through a bank in Sri Lanka. This is important. These days there is a dialogue going on. This exemption of they are going to remove. So here, what is mentioned? So services provided by a resident person in Sri Lanka to a person outside Sri Lanka. So these three conditions need to be satisfied. That services should be provided to person outside Sri Lanka and services should be consumed outside Sri Lanka. Right? Consumed outside Sri Lanka. Say, consume outside Sri Lanka. Utilize outside Sri Lanka. Where the payment of such services shall be received in foreign currency. The money should be coming to Sri Lanka foreign currency. And it should be coming through a bank. If it is the case, that particular income is exempt from tax. Right? Remember, another law, the asset notification has been issued in respect of the foreign exchange under the Foreign Exchange Act. It says, you know that in coming in 2022, we have a dollar foreign currency crisis in Sri Lanka. Issue problem. So therefore, under the exchange control act, they have mentioned that money should be bring to Sri Lanka. Whatever services or the export what they are making from Sri Lanka, that consideration of the proceeds, sales proceeds need to be bring to Sri Lanka in foreign currency. And there is a time limit given under that particular act. And for the gazette notification, it is 6 months from the date of the invoice. The same here apply as per that thing, that money needs to be bring to Sri Lanka within 6 months. Otherwise, that exemption cannot be claimed. So there says any foreign source. Foreign source. That means there is no source in Sri Lanka, source is outside Sri Lanka. Let's say if I invested in a company outside Sri Lanka, if I am getting the dividend, that is coming under source is outside Sri Lanka. Foreign source. That is also exempt. When I do some sort of business outside Sri Lanka and getting that money to Sri Lanka, that is also considered foreign source. Say I have a building outside Sri Lanka and I am getting a rent income. Right? That is also, I have a source which is foreign source. So that is also exempt. Any amount derived by a non-resident person from laboratory services or standard certification services. A religious institution which is registered with the ministry in charge of the subject of religious affairs by way of grant or donation. Right? So income is coming as a grant or donation. Gains and profit received or derived from business. Other than gains from the realization of capital assets and liability of the business, higher personnel from following any new undertaking which is not formed by splitting up or reconstruction of an existing undertaking, commence on after 1/4/2021 but prior to 1/4/2023. Investment should be made prior to 1/4/2023. Right? Again, they have given tax exemption. Subject to condition contained herein, business shall be already commenced prior to 1st April 2023. An undertaking which is involving the sale of construction material recycled in a selected separate site established in Sri Lanka to recycle the materials which were already used in the construction industry. Right? So they have set up a business at that time, they have given 10-year tax exemption. Actually, very recently they have closed because all the exemption they want to remove. Objective is to bring the tax GDP ratio. Right now it's 8.3%. If I correctly, they want to bring to 25% tax to GDP ratio by 2025. Therefore, that is the reason they have to taken out all the exemption. So 23 they have got this exemption. Therefore, now we cannot do that type of investment. But if somebody has makes that investment, they can still enjoy that exemption. because in Sri Lanka we have a lot of, I mean, at that time construction industry was a big area, right? So therefore they have given that to recycle the construction material, right? Whatever thing they have used in the construction industry, they are using that as a raw material and do recycling. Then that business income they are entitled for a 10-year extension. These are all the TBED. Person who undertake the TBED course and thereafter is standing start a business. That they are given 5 years tax exemption. Apparently at the time that institution also have the tax exemption, but they have thereafter they are curtailed to 2 years. Earlier it was 5 years. Thereafter it was curtailed to 2 years. Down for 2 years. Any undertaking commenced by a resident person from the purpose of manufacturing of both of them Sri Lanka and received or derived any gains and profit from the supply of such photoshop for window 17. Renewable energy project 100 megawatts. So solar, wind power, that exemption given for 7 years. Resident person construct and install communication towers and related appliances using local labor and local raw materials to provide required technical services for such construction installation. That is also 5-year tax exemption. Tax exemption period provided in the above shall be reckoned from the year of assessment in which the undertaking commenced to make profit from transaction entered into that year of assessment or from the commencement of the year of immediately succeeding the year of in which the undertaking complete a period of 2 years. That means if they have started the commercial operation that year or another 2 years they have given. Right. And undertaking for a letting bonded warehouse or warehouse let for offshore business in the Colombo Ambansara port. That is actually they want to expand the Ambansara, but in this port operation, therefore that exemption has been granted. This exemption is after 2024. Now, this last year it was closed. Gains and profit are now derived by any person from the sale of produce from agro farm of such person within the period of 5 years. Tax exemption for 5 years, commencing from 2019. So, agro farming and agro processing they have recognized separately. Farming is the basic part. There is no change to the production, right? So under the agricultural industry, we are getting produce. We produce. I mean that is the difference between production or the manufacturing and the produce. So produce means it's coming with the natural cause. Production is happening by intervention of the mankind. Here produce, right? So agro farming is that particular industry is giving, or the particular business is giving the basic form of that agricultural industry. So that is it for 5 years. But the processing is like, you know, in say we have cinema, maybe that's a state which we harvest the cinnamon, basic agro produce thing, and there we do some sort of processing and manufacturing the cinnamon oil or cinnamon powder. That is processing. So that is not exempted, but farming part, that is exempted. Provided that in relation to an undertaking which consists of the production of agro farming products and utilizing such produce to agro processing or manufacture of any product, such produce shall be deemed to have been sold for the agro processor or manufacturer at the market price prevailing at the time of such deal, and the gains and profit completed on that basis such deal sales in relation to the agro farming shall be considered as exempted gain and profit within a period of 5 years of maximum commencing income for April 2019 is exempt. So what it means, say, if somebody having the agro farming and the agro processing, right? Agro farming thing is a tax exempt, but agro processing is liable. So they are using, I'm going to say, I have a cinnamon estate, I am doing manufacturing of cinnamon oil. So then part of that agro farming process should be exempted. Therefore, say if somebody is having the growth thing and using the agro produce to the produce from the farming to manufacturing process, then we have to recognize deemed sale using the market price at the time of the sale. When we are recognizing the sale for the notion of sale, which is coming, we have to recognize two parts, but it's two division of section. One thing is agro farming, other thing is agro processing. Right? We have to recognize deemed sale from agro farming to agro processing. So profit earned by the agro farming is exempt. Profit earned by the agro processing is liable for tax. So therefore it says we have to recognize the deemed sales utilizing the market value of the date of sale. Let's say, simple example, say tea estate. Normally in a somebody selling a tea estate, some are just giving green leaf to the tea manufacturer. Right? Some they have their own estate as well as manufacturing plant. Right? So if somebody is selling only green tea, that is exempt. It's fine. Right? So somebody can purchase green tea and they can manufacture fire tea, the black tea. That is liable. That is because that is processing. Right? If somebody is having tea estate as well as manufacturing plant, so they have to recognize state income separately, processing income separately, plant income separately. Right? So therefore, they have to recognize notional sales from the state to the plant, manufacturing section, division. So in this industry, they have some sort of recognizing what is the price for the 1 kilogram of green tea. That can be applied and they can recognize the notional sales. That's the meaning here, right? So therefore, in the same sale, I have my own estate as well as my manufacturing plant. Then I have to recognize sales from my estate to my plant, manufacturing plant. That's why it says deemed sales. Gains and profit received or derived by an authorized person carrying on the business of strategic importance as approved under the provision of the Colombo 16D Economic Commission Act, and the employment income of any employed of that act, up to the extent provided for in that act for each year of up to 25 January 25 that is under the Port City Act. Under the Port City Act. Now that is the only way we can start business, start paying taxes. That they have given for a open for the window for a period of till 2025. Right? So if somebody is going to open a business there, they are entitled for a tax exemption. But exemption is under the Port City Act for the gazetted period. They have not mentioned how what the period. It's based on the decision given by the commission. So how it's happening? We have to first log an application, and there are some conditions on the 5 conditions. One of condition need to be satisfied. And if the commission is giving the concern to that particular person to do the business, and thereafter it has gone to the Parliament, Cabinet, and they have issued a gazette notification confirming the tax exemption period. Under this Colombo Port City Act, Commission Act, that particular business, just like BPO, other one is the but the IT industry, they can enjoy that business, but they cannot do business in Srilanka. All the business should be outside Srilanka. Also, they have to source the fund for the investment entirely from outside Sri Lanka. They cannot they cannot go for a borrowing from a bank in Sri Lanka or any institution in Sri Lanka. And also, they have to remunerate to their employee in foreign currency, designated foreign currency. No healthcare transaction in any way. Right? And it says after the completion of the infrastructure, they have to locate there. Their business should be located there. Until such they can locate the business outside the country because still that is under construction. Right? So once that infrastructure is completed, so they can shift that business. The location of that business should be located there in the port city area. So employee also tax exempt on that remuneration. It says that in Lanka and the value-added tax act is not applicable. Right? So here anyway that under the Lanka Act it says that is exempt. Right? So I saw that that maximum period is 25 years. They can give that tax exemption. And actually it is discretion of the commission. Commission has to recommend how many years they are going to give that tax exemption. This is the very recent one. The exemption only that port city business, which is it should be basically fund should be outside Sri Lanka, and they cannot do business in Sri Lanka. All the business should be focused outside Sri Lanka, and salary should be paid in designated foreign currency other than India. Employee also tax exemption. They can also get that exemption on their remuneration as well as that particular venture also tax exemption. This depends on the recommendation given by the commission as well as the gazetted by the parliament. Right? Just like I'm in a separate country, so no Exchange Control Act is applicable, Lanka Act is applicable, and value-added tax also not applicable, and you know the termination of employment workman compensation, that is also not applicable there, but EB and ETF Act is applicable. So yeah, that is exemption. Areas please. So some are coming under investment as well as it is there in the business. Any area? Anything to clarify? No. Right. Okay. So I'm in the here. This area. I want to take this area. So next, when I'm being a question, I'm going to give the certificate. Yeah. Say, you know that under the computation of business income or the investment income, if you want to work out an income, which is the provision as per the tax law as it is applicable. Right? You mean that say I have a business which is exempt from tax. That part is exempt from tax, and other part is liable for tax. So the exempt profit also need to be worked out based on the same provision. Right? Same provision. Say depreciation, yeah, anyway is allowed. And there is no impact, but we have to consider, we have to follow the same principle. Then we can get the capital losses, likewise we can work out. We have to work out. Here also, in this particular case also, so agro farming, when we work out business income, exempt income, we have to proportionately get the expenditure. Say I am using some sort of common expense. I have a common expenses for which is related to the agro farming as well as processing. So then I have to get some sort of basis to recognize the particular expenditure for both parts. Some may be directly attributable to one part. That can be directly we can consider. Example, say fertilizer. That is not related to the factory. That is for farm. So we cannot deduct that particular expenditure from factory when we work out the factory income, processing income. Say transport, that may be the both. If transport is not only for the bringing the raw material, then we cannot deduct that particular transport from the processing part. And that asset is related to the farming. So plant expenses, that is directly related to the processing part. Likewise, we have to recognize in that way. Right? Say we have accounting office and the administration office. So that particular expenditure is applicable to both. Right? Right. Clear? Right. So that is exempted then on. So then we discuss final withholding payment. You know that we discussed withholding tax. Under the withholding tax, payer, and the payer is making a payment, a particular payment that is subject to withholding tax. Basically, that income we have three sections in Sri Lanka, which is applicable for withholding tax. Section 83, 8.85. Subject to change, right? So, and even that. But the section is 83, 84, and 85. Section 83 is relevant for the withholding tax on employment income. Right? It goes as, right now goes as APIT. Previously it's coming out as paid. Right? So under that particular section, we have to know the tax. If the employment remuneration or the total remuneration is exceed more than 100,000, then employer has to deduct tax. It's mandatory. Right? Deduct tax. That is employment income. Second thing is section 84, that is coming under the investment return. Right? Just like interest, dividend, royalty, natural resource payment, what else? Dividend, right? Winning from lotteries, that is come under the investment return. Right? So under that particular section, we have to deduct tax. And rent also, right? Interest 5%, rent 10%, dividend 15%. Other what we have discussed is 14%. Withholding. Right? So if there any payments to a non-resident person, then based on that rate we have to deduct, otherwise that goes under the double tax agreement. Rate is under the double tax agreement. So under section 88 of the Internal Act says some particular withholding tax is fine. Internal law itself says this withholding tax is fine. Right? As per the tax law, it says it is fine. So I think you know that what is withholding tax, right? So then under that withholding tax, some withholding tax they are recognizing as finance. Okay? So these are the final withholding payments. Amount paid as winning from a lottery records betting gambling other than amounts received in conducting as a business. Betting and gambling. So you know that winning from lottery is subject to withholding tax at 14%. Right? If that lottery price is more than 500,000. If it is more than 500,000, then it is subject to withholding tax. Tax rate is 14%. It is fine with it. Right? Then it shall not be part of taxable income from investment. Right? If not. And also, in conducting business of consists of betting and gaming. If it is a betting and gaming business, it is not finance. It is part of business income. Right? Dividend paid by a resident company. When the resident company is making a division of profit, it is subject to 15% AIT, advance income tax right now. Historic. It says section 88 says final withholding tax because the name was withholding tax previously, and 2019 December they have changed the law. So in 2021 not introduced as in the extension of the recipient. So then it goes as advance income tax. Only what is that change? Name. But mechanism is withholding. Right? That's right. Pay also withholding. Withholding means when the payer make the payment, tax is installed by himself, right? That is it. That is why it's called withholding. This is the mechanism is withholding, right? So advance personal income, advance personal income tax is API, right? So here advance income. When the resident company is making a profit distribution to its shareholder out of profit, out of the profit of the company, then it's subject to AIT, advance income tax rate is 15%. It is fine. It is fine actually paid. Then it can't be a part of asset purchase, right? It is part of what the final withholding payment. So under that section, it's and that part it is liable for tax, but the maximum tax rate is 15%. Payments made to a non-resident person who is not a citizen of Sri Lanka or to a non-resident entity other than payment derived to a Sri Lanka permanent establishment. So without tax is voting. So that those are withholding, right? You know when you are making a payment to a non-resident person, at the remitting point, bank has been directed given the direction by the Commissioner General. They cannot remit any money from Sri Lanka without the tax clearance. They have another mechanism to get the tax clearance. So that is the the control put by the put under the legislation. If you want to make a payment to outside Sri Lanka, it should be go through bank, right? At the remitting point, bank is requesting you to provide the tax clearance. Tax clearance means so remitter has to get a clearance of the direction from the Commissioner General. What is the tax liability on that particular remitter? Right, direction. First thing, direction. So as per the direction, Commissioner will determine what is the tax rate. Whether it is subject to tax, yes. Okay, then what is the rate? Right? If it is not liable to tax, they are giving a no tax direction. This is not subject to tax. Like that, right? So then thereafter, based on the direction, person who remitting the money has to deduct tax and pay to the tax authority. After making that payment, they are issuing another clearance certificate. This particular payment already subject to tax and they can remit up to this level. Right? That's how it's happening practically. So it says payment made to a non-resident person who is not a citizen of Sri Lanka or to a non-resident entity. Right? Non-resident person, of course, non-resident entity also covered. Right? So if some payments go to a non-resident person, it could be subject to tax in Sri Lanka based on the rate, right? But it is final. Once we deducted that tax, another is no more liable tax in Sri Lanka. Right? Example, say dividend to a resident person also 15%, to non-resident person also 15% of the tax as per the DTA agreement. So then it is fine. What is that? The employment income, under the employment income also if they are deducting tax, that is fine. Right? The rent income, that is for the non-resident liable for tax at 14%. That is fine. Interest, at the rate. We are making a payment to the non-resident person, interest, what the return tax rate? At the rate. We are making a payment to non-resident person, the home is interest. What the return tax rate? 5%. 5. 5. At the rate. 5%. The rate. 5%. Right. Huh? Right. Five. By making a payment to targeted farm, it is different. How do you tolerate? Exactly. Yeah, it is exact. So that's the difference. So if it is any income which is exempt under the environment, there won't be any tax. That's the difference. There won't be any tax. So I told you under section 2, it's very clear, right? So person could be liable for Sri Lankan income who is having a taxable income. So when we work out the taxable income, so exempt amount we are removing. Or person who is having who receives final withholding payment. It is final withholding payment. They are the person who is liable for Sri Lanka income tax. If somebody is exempt from Sri Lanka income tax, they are not liable for even to pay any single rupee in Sri Lanka. So then interest is not subject to income tax. That's what I mentioned. In that type of thing, they are giving a direction to the bank. This is no tax liable rent. But the mechanism is we have to follow. Right? That is practical thing. I mean, it's not there in the law. It says if we want to make any payment, we have to get the direction. So under direction is the commission will confirm that it is no tax. They can remit up to this amount. Okay? Right. So non-resident person, other than payment derived through a Sri Lankan permanent establishment. If there is a fee in Sri Lanka, a permanent establishment, so then it is not final. Permanent establishment means that particular person has a place here, establishment here, that is in the nature of permanent. We are recognizing what is that permanent establishment, right? So if it is the case, non-resident person, they can do business in Sri Lanka through a permanent establishment. So I could say in case of the company, how we determine the residency, like tax residency. How we determine? If it is incorporated under the law in Sri Lanka. If it is a Sri Lanka resident person. You know that Hong Kong and Shanghai Bank, HSBC, it is not incorporated in Sri Lanka. Right? Incorporated in Sri Lanka. But they are doing business in Sri Lanka. It doesn't mean they are resident for Sri Lanka. They are still non-resident. Difference is that because that is company. Right? So why non-resident is important? If that particular person is resident for Sri Lanka income tax, they are liable for tax in Sri Lanka of the income wherever they arise. By any chance, if the Hong Kong and Shanghai by HSBC is resident person for Sri Lanka income tax, he could have comfortably pay the IMF loan by taxing that all income. Right? But HSBC is a non-resident company for Sri Lanka income tax, therefore they are liable on that income. But they have a permanent establishment in Sri Lanka. They have a permanent business place in Sri Lanka. They have a branch office. Their head office is not in Sri Lanka. Right? If they have a permanent establishment, then that withholding tax is not final. Permanent establishment, under particular tax agreement, we have to work out the business profit. Under Article 7, it says how to work out the business profit. In that Article 7, it says if somebody is an non-resident person doing business only in that particular country, they are not liable for tax in Sri Lanka. But they are doing business through a permanent establishment in Sri Lanka. That particular business income, if we work out as a distinct entity, separate entity, right? Separate entity. You know that in case of the branch office, it is not a separate entity, right? The same entity. But for the tax point of view, branch profit we need to work out as considering this as a separate entity. But if that branch office receive any income, which is subject to withholding tax. but it shall not be withholding, final withholding tax, because if that non-resident person is doing business to in Sri Lanka through a permanent establishment. Right? Other than that, if some non-resident person is doing business in Sri Lanka, if that particular income or the business income or investment income, whatever thing is subject to final withholding or subject to withholding tax, shall be recognized as a final withholding payment. Final, right? Reason is why. I mean, that particular non-resident we cannot cut. That thereafter, right? Once we make the payment outside Sri Lanka, we cannot go behind that particular person and collect that tax. Therefore, tax law is also very practical. It says, okay, you pay this tax as Sri Lanka tax. Thereafter, you can take that money. That is the final withholding phase. Right? Right. Interest paid to treated as being derived by a non-resident individual who is a citizen of Sri Lanka. That is citizen, Sri Lanka citizen, not non-resident, right? Or is a non-resident but Sri Lanka citizen. Then that interest is subject to 5% withholding tax. It is fine. But in case of the resident person, citizen resident person, interest is subject to withholding tax. It is not final. This is citizen non-resident person. This is fine. Provided, however, the following interest amount cannot be deemed to final withholding payment to such non-resident individual who is a citizen of Sri Lanka. In case of the individual, how to determine the residency? Active residency, right? How to determine that particular person in case of the especially in person is outside Sri Lanka, if he spent in Sri Lanka more than 103 days for a particular year, 12-month period, which is expanded or ending in a year of employment. Right? More than 102 days, if you physically present in Sri Lanka. If it's the case, that particular individual shall be treated as resident person for Sri Lanka income tax. Here, but citizen, that means Sri Lankan citizen who will be not resident person. Who would be, right? Say, after completion of this thing, you go for a foreign job. Right? If you are outside Sri Lanka more than 180 days, then you will be non-resident person for Sri Lanka income tax. But you are this Sri Lankan citizen. Citizen and residency, two things. Right? Nationality also one thing, right? Other countries, right? The tax law address those things, right? Citizen, resident, and nationality. We will discuss under the double tax agreement what is nationality. Such amount of interest paid and falling within the relief threshold. So in individual case, we can claim up to 1.2 million threshold tax relief. Such amount calculated by deducting the total of other source of income, accessible income, that is also less than 1.2 million. So then it shall not be final withholding payment. Then he is entitled to get the refund. That's the objective. So that's all about that. So then final withholding payment, another final withholding payment. What are the final withholding payment? Basically, winning from lottery, dividends, other payment to non-resident person. Right? Under the withholding section, we discussed section 85, which is service-related payment. Service-related payment. That is also if any service-related payment to non-resident person is also subject to tax, withholding tax at 14%. That is also final, right? So then, accessible income to taxable income. So first we have to work out the accessible income, and we can make the deduction under section 52, the taxable income. Right? What are the deduction under section 52? So in arriving at the taxable income for an individual or entity, for a year of customer, the aggregate qualifying payment referred to in the fifth schedule to that shall be deducted. Section 52(1) says qualifying payment can be deducted by the individual as well as entity. Right? Individual as well as entity. It says in arriving at the taxable income of an individual or entity for a year of assessment, the aggregate qualifying payment required in the fixed schedule to that shall be deducted. Right? Qualifying payment shall be deducted. In arriving at the taxable income of an individual who is resident in Sri Lanka for a year of assessment, the aggregate relief required in the fixed schedule to the act shall be deducted. First thing is a qualifying payment. Qualifying payment can be deducted. Second thing is only for individual who is a resident. Only for individual who is a resident of Sri Lanka, relief can be deducted. Right? Under the first one, it doesn't say one individual or an entity. Second thing, but specifically applicable only for resident individual. Thereafter says in arriving at the taxable income of an individual who is not a resident, not resident in Sri Lanka for a year of assessment, but is a citizen of Sri Lanka. That is also for individuals, citizen, but non-residents. They can deduct. They can also entitle for a relief. Okay. So then qualifying payment. Section 52, subsection 1. Donation made by an individual or entity donation made by an individual or entity in money to an approved charitable institution. So it's defined what is charitable institution. A charitable institution established for the provision of institutionalized care for the sick or needy person and declared by the ministry as an approved charitable institution. If it is the case, so we can consider donation as qualifying payment. Right? Says that is donation. It says donation made by an individual or entity in money. Condition is donation. This should be money donation, money, cash donation to an approved charity. So under qualifying payment, first thing is donation or cash donation to an approved charity. That is coming under the qualifying payment. Right? So what is the charitable institution? Is for provision of institutionalized care. There should be an institution. That care for the provision of that care for sick or needy. Only these conditions need to be satisfied. Right? There should be institution. If that institution is do some sort of caring activity for sick or needy person. And also, it needs to be approved by the respective ministry. If this is the case, that is the charitable institution recognized under the section 52. Remember, that is this definition is applicable for section 52. Institution which established for the institutionalized care for sick or needy, and that particular institution needs to be approved by the respective minister, subject minister, and charitable institution. How is practically happening? So, say, children home. Somebody wants to start a children home, they can set up a children home. But for the tax point of view, it should be approved by the ministry. So we have to apply for the charitable status. So ministry, they are not issuing a gazette notification. So this is a charitable institution. Otherwise, it is not a charity for this purpose, right? But in the general purpose, yes, you know, charity is coming. What is the temple, church, mosque, whatever thing that is coming under the charitable institution. For the but this purpose, charitable institution means any institute established for the sick or needy people, and that need to be approved by the subject committee. If it is the case, yes, it is done by institution. So if somebody is making a cash donation, that can be considered as a qualifying pay. So, issue? What you do? Huh? Wait. What is it? Right? Right? No way. Yeah. The letters I mean, wait. Huh? But I'm not playing, sorry. So you took almost 20 minutes from my lecture. Right? So after the whatever you say that we will go that you didn't come at 3 o'clock, right? So we will finish this. So if you need the biological break there, you can go. Right? Otherwise, I'm continuing, right? No break, sorry. Right. Important thing here is it should be cash donation, and that need to be made to a charitable institution. Definition is what is that this institution is established for institutionalized care. That means there should be an institution for sick or needy, and particular institution need to be approved by the minister. If it is the case, that donation can be considered as a qualifying payment. Remember, a goods donation is not applicable for this. Somebody is making as a good donation, good. That is not considered as a qualifying payment for tax purpose. Right? I can make a donation to, say, church or the temple, but it is not a qualifying payment. Right? Right. So, what is the amount what we can deduct? In case of an individual, 1/3 of the taxable income of the individual or rupees 75,000. That's the maximum thing what we can deduct, even under the qualifying. So, if I make a cash donation to taxable institution, it should be this type of thing. So, I can deduct 1/3 of the taxable income or rupees 75,000. That's the maximum what I can deduct. Right? In case of the entity, 1/5 of the taxable income of the entity of rupees 500,000. Whichever is lower, that the amount is limited. So if the actual expenditure is less than 1/5, the actual expenditure I can deduct. If it is more than that, but it's limited to 1/5 of 500,000. So lower amount I can use. That is the maximum amount of what I can deduct when I work out my taxable income. Any question? Other than rate. Any question? No. No. Are we good to go? Or can I ask question? Any question? It says 1/5 of the taxable income in case of the entity. In case of the individual, 1/3. So, but we are work out the taxable income. Taxable income, right? We are deducting qualifying payment and relief from accessible income. But law says 1/5 of the taxable income or 1/3 of the taxable income. Right? That is as per the law. It says after deducting qualifying payment and relief, you are getting taxable income. But its law says 1/3 of taxable income and 1/5 of the taxable income. Remember that, right? In my view, it is mistake done by the legislature.
The hospital comes under take any institution or
Correct. Hospital means what sort of hospital? No, we are discussing that now, right? So that is the first thing is donation to what the charitable institution. Donation to charitable institution. Thereafter it says donation made by an individual or entity in money or otherwise. Money or otherwise to following. So it says specified institution as well as funds. It says to government of Sri Lanka. Somebody is making any donation to government of Sri Lanka. That is treated as qualifying payment. Qualifying payment. So then government hospital coming under here. Right? It is government. If somebody is making a donation to hospital, government hospital, it is coming under here. Sorry, there is no restriction. Yes, there is no restriction. Whatever amount you donate to government, you can deduct under the qualifying payment. And also, it is not necessary to be in cash, even goods donation. And remember, you know that during the COVID period, so many medical equipment has been donated by some individuals or the entities. That is qualifying payment as per this. And there is no, as you go, there is no maximum limitation. Whatever amount you make as donation, you can deduct. A local authority. Any higher education institution established or deemed to be established under the University Act. That sort of thing. Higher education institution established under the University Act. Universities, which is approved by the Grant Commission. It is Grant Commission. British and Pali University, or the higher education established under that Pali University Act. Fund established by the government of Sri Lanka. Any fund established by the government of Sri Lanka. Government funds. A fund established by local authority and approved by the ministry. Approved by the local authority, approved by the ministry. Fund. Seven fund. National Housing Development Authority. Now seven fund under the National Housing Development Authority. Under that, if somebody is making a donation to seven fund, that is treated as qualifying payment, right? Previously, you know that we have notary call 7. I don't know right now. I didn't see in there. The concept of that what the amount they are getting from that notary is used to put up houses for low income earners. Right? You know that previously we had in Sri Lanka we have concept of Gamda and all those things under that, but the fund is still there. This fund has been actually amalgamated with Sri Lanka saving bank. Right? But if somebody is making a donation to this particular fund, it can be considered qualifying payment. Fund is established by the provincial council and approved by the ministry. First one is, but the other one is local authority. The second thing is provincial council. But the fund should be approved by the ministry. Opinion and fund. That's all getting fund. Somebody is making a donation, so it is qualifying payment. So under this one, remember, first thing is donation to approved charity. So that particular donation should be cash. We have to claim under qualifying payment, it should be cash. And that is maximum limitation also. And remember, the definition is definition has been given for the charitable institution. All criteria need to be satisfied. We need to claim qualifying payment. Second thing is government, donation to government, specified institution or specified fund. There is no maximum limitation as well as cash and any kind. Good donation also coming under the qualifying pay. And there is no maximum limitation. Any amount we can deduct. Yeah. You know that very recently I got the story or somebody is seeking an opinion. That particular company is giving is planning to give a ambulance to suicide. Number again, 1919, right? 1990. Right. So somebody is giving an ambulance to suicide. Whether it is deductible, right? That particular company. Whether that can be deductible expenditure or not, is there any chance to it to deduct that? Right? Can you give me an the certificate? Slowly. Other thing. No, say that. So there is some sort of what is that? Trust through the fund that is being filled. I mean, trust free they still donation, but those are Sri Lankan established. We ask you to deduct. So when from where? The company doing a bit. And we are come to the when we work out this under that when we work out the income from this we cannot deduct. What is the section? What is the section? Section 11. Yeah, that is correct. When we work out the business income, we cannot deduct. So any donation we cannot deduct. Under section 11, it says expenditure incurred in the production of income we can deduct. So that means production of income means that particular expenditure we have to give a justification that is required to generate income. Any expenditure which is not supposed to generate income, we cannot deduct on section 11. And also under section 11, capitalized expenditure we cannot deduct. Right? So that's the where we cannot deduct any donation. That particular section says. Okay, so under that, when we have work out the business income, we cannot deduct. So is there any chance to deduct anyhow that expenditure? Yes. Somewhere. So we come under the section. Qualified payment? Not qualified payment. Under which category? Donation to the very sorry, suicide is not got down. No, they are not doing a institution care position only. So certainly they transport only that sick people. Care is not transport. They should have institution care. No, so that is not counted. It's not counted. It's a trust. Yeah, that's the question. You should ask that whether it is government or not. Whether it is a fund established by the government. No. These things you need to check, right? Before you drafting the answer book, you have to check that thing. That's how you should build your advice. And just you can tell that, okay, this is deductible or not deductible. No, first you have to ask questions. First thing is we have to check whether that particular is a company or not. Right? Whether it is a Sri Lankan institution or not. Whether it is coming under these things. These things. If it is yes, yes. Otherwise, we can't do that. Right? Same question I asked that after they told that no, it is not government. It is not a fund established by the government. It's a separate trust created by them. So then I don't know, we cannot do that. Under even qualifying payment. Thereafter, because I mean the sorry is doing good thing, right? It's a charitable activity. Charitable activity. Providing some sort of relief to needy person. But it is not a charitable institution for tax purpose. Tax purpose. Under section 52. It's not a charitable institution under section 52. And even it is not there. Yeah, if it is coming under the government, yeah, any institution under the government, authority, department, government department, likewise. Thereafter, yes.
If funds are put by DGO Finance Ministry,
Yeah.
is it can be deducted as qualified?
Fund approved by the government.
Government.
Yeah, it should be established. The fund should be established under the government.
Or approved by.
Established under the government. Yeah.
Or approved by special purpose.
The concession? No, there is not the concession. Yes. I know that lot of funds they are telling that this is a charitable. No, it is not for this purpose. So say COVID fund, it is established by the government. Should be established by the government. So then fund should be established by the government. Yeah. So that is goes as a trust. They create a trust, separate trust, but it is not a charitable institution for this purpose. Thereafter, how the same question they have asked, and they also get that donation. Also, the company also make that donation. So, and when they check with the Commissioner General, also they have also confirmed, yeah, Suhari is not a charitable institution for this purpose, as well as it's not coming under this category. So then how, because it's, I mean, there's, I mean, the connection with the government and all those things, right? But how thereafter is how it's structured. They told that, okay, you made the donation to the Ministry of Health. Right? From that account maintained under the Ministry of Health. From the Ministry of Health, they can get that money. So when the donor makes that money to the Ministry of Health, it is donation to government. Then they get that clear up, they are saying, they are trying, I told you, then we can. So they are for the deduction, you need to get a receipt confirmation from the ministry. Here donation made to the Ministry of Health. Or the whatever ministry, right, is coming under the government. Then that can be deducted. Another qualification mistake, right? When you are working with something, we cannot do that. Okay. Right. I mean, when you are working on some organization or whatever thing, so that point of view, you have to remember those things. Right? So, and also practically, I mean, these things are there. That is as per the law. Law doesn't give any administrative provision how to check these things. Practically, how we can prove when we are making a donation, we have to get a official letter for the confirmation. The form that need to be on the law, we have practical use. So, what the donation you made, say, charitable institution, you have to get what sort of institution, what they are doing. You know that in Cancer Society, that type of thing, they do sick on people for the purpose there, right? So then we can do that, right? And also, you need to get the written confirmation or the document of the receipt. Some receipt they are mentioning this is charitable institution under this section. And also you can check what are the charitable institutions. If they are in the what is this website, Commercial General website, department website, then they are what are the charitable institutions they recognize, but you have to again check whether it is doing this type of thing. Because charitable institution we are reading for another purpose. So they also charitable institution also not liable for tax if they are doing charitable activity. That activity and this activity are different. Right? Example, the religious institution, they do some sort of charity activity. If they are doing only that particular activity, they are not liable for tax in Sri Lanka. Even they are within the definition of the charitable. Because we do tax, that particular income should be either employment, business, investment, or other. They are not doing that type of thing, they don't have a source that is coming under the taxable income. Right? Right. Is that clear? Right. Then we'll move to next area. So that is also qualifying payment. Contribution made by a resident individual in money or otherwise to establish a shop for female individual who is from a compulsory beneficial family as recommended and confirmed by the Department of Community Development. Right? Female who is going to start a shop. And somebody making a donation, somebody make a donation to the grant or the support, financial support or whatever thing, that can be done as a qualifying payment. There is no limitation. Expenditure incurred by any person in the production of a film. This is especially applicable to the film industry. Production of a film at a cost of not less than 10 million. Sorry, 5 million. Film cost should not be less than 5 million. More than 5 million, right? If it is again, we can deduct, but there is a limitation. In the construction and equipment of a new cinema at a cost of not exceeding 25 million rupees. So set up a new film hall or cinema or upgrading equipment. Right? That maximum cost shall not be exceed 25 million, less than 25 million. Okay, right? In upgrading cinema at a cost not less than 10 million. Provided that the deduction shall be restricted to 1/3 of the taxable income. In case of this thing, the maximum amount what we can deduct is 1/3 of the taxable income of that year, and any amount which is not deducted in current year may be carried forward and deducted in the next succeeding year. And thereafter, any period we can carry forward and deduct. But subject to this limitation. But the maximum amount what we can deduct 1/3 of the taxable income. Right? It says film means any audio visual presentation of moving image produced to be exhibited by projection of on a screen in a cinema. That is the film. The expenditure on construction and equipment of upgrading cinema shall be certified by the National Film Corporation. They have to give a certificate. How much they have spent because they have to get an approval, but we cannot start a cinema thing, right? It need to be approved by the National Film Corporation. So they have to give a certificate. They are giving that. They are checking how much they have spent, and with the approval of them, they can do that expansion or whatever thing. On that, they can give a certificate. National Film Corporation, they are giving a certificate how much that particular person invested and what are the instruments they have newly used for the upgrade purpose. Likewise, they are giving. Based on that certificate, we can see that. But the maximum amount is 1/3. Remember, in case of the film, it shall exceed 5 million. New cinema 25 million shall not exceed 25 million. Upgrading cinema 10 million. Maximum amount should be 10 million. If we are making more than that, we cannot get the deduction. That is specifically for film industry. Thereafter release. In alignment, the taxable income for an individual. This is applicable only for individual who is resident in Sri Lanka for a year of taxman. The extent is referred to in the picture rules to that can be deducted. Remember, a relief is applicable only for individual, so not for entity. So relief is given only for individual currently. As per the current law, we have relief only for individual. Something is for the individual. Relief up to rupees 1.2 million for a year of taxman. That is personal relief. We just call personal relief. So any resident for individual, we can claim up to 1.2 million as the relief. Right? As a relief. That's right. If you remember, under the employment income, APIT table 1 has been set up in a way, if somebody is earning more than 100,000 per month, his full remuneration or total remuneration is more than 100,000, then he is subject to APIT. So why they have set up that 100,000? Because of this one. 100,000 into 12, 1.2 million. In case of the resident individual, who is having more than 1.2 million, then 1.2 million of taxable income, then he is not liable for Sri Lanka income tax. It doesn't mean he is exempt, right? He is not liable. He is not within the chargeable section. He doesn't have a taxable income. Person should have a taxable income to pay tax. Right? So 1.2 million. So that is applicable for individual, resident individual. So a trustee, receiver, executor, or liquidator shall not be entitled to deduct the personal relief. Right? The relief shall not be deducted. The relief shall not be deducted again came from the realization of investment asset. We cannot deduct 1.2 million from realization of investment asset. Came from the realization of investment. Remember that. Right? So gain from the realization of investment is coming under the investment income. So it could be coming under the taxable income, but this 1.2 million we cannot deduct. Personal relief we cannot deduct. Right? Right. So that is for the personal relief for resident individual. As well as resident individual as well as citizen, but non-resident also entitled for this 1.2. Remember, citizen, but non-resident. Sri Lanka citizen, but non-resident also entitled for 1.2 million. Personal relief. That's why when we discuss the interest exemption, they told that citizen up to 1.2 million is not final withholding. More than 1.2 million is final withholding. So they can get that refund. Right? So any resident individual they can claim 1.2 million what's that? Personal relief as well as citizen but non-resident also entitled for 1.2 million relief. Say you are doing a business, you are engaged with the employment contract outside Sri Lanka, you are not in Sri Lanka. Say 2 years you are outside Sri Lanka. Then you are considered as non-resident person for Sri Lanka. You are having an income from Sri Lanka. Right? But if it is less than 1.2 million, again you are not liable for Sri Lanka income tax. If it is more than 1.2 million, then you are liable for Sri Lanka income tax as a non-resident person. But you can deduct that 1.2 million as person. Yeah. Okay. Right. An individual with a rental income, that individual that is also again rental income from an investment asset. An amount equal to 25% of the total rental income for the year of taxman being a relief for the repair, maintenance, and depreciation related to the investment asset, but shall only be allowed to the extent no deduction of cost is claimed for any actual expenditures incurred by the taxpayer for the repair, maintenance, and depreciation of the investment asset. That is rent relief. That is only applicable for individual who is having rent income. Rent income is part of taxable income of investment income, right? He can claim 25% for repair, maintenance and depreciation. Repair, maintenance and depreciation. Okay. So irrespective of whether he is incurring a cost or not for that activity. Right? If he is deducting actual expenditure for repair or maintenance, he cannot get that credit. If he doesn't have any expenditure, still he can claim 25%. Right? Huh? They are
Can they deduct actual?
yeah, even actual they can. Even actual, it doesn't say we cannot do because when we discuss investment income, and the section 11 says any expenditure incurred in the production of business income or investment income, or he can deduct expenditure. Okay. If you are paying with that actual expenditure, we cannot get 25% relief. We don't have that particular expenditure, even we can claim that. So then, for the taxpayer's point of view, if the actual expenditure is more than 25%, better to claim actual expenditure. If actual expenditure less than 25% of the total rental income, right? Better to claim that 25%. That option is the taxpayer. These things are the important points, right? Yeah, it doesn't say directly what the amount you should deduct. It says no deduction of cost is claimed. Any actual expenditure. If it is the case, you can get this 25% relief. That's how it is stated. If that means if he is claiming actual expenditure, he cannot claim the 25% relief. Rent relief. And also remember, rent relief can be claimed only on the assessable income. Therefore, rent income means after deducting expenditure for the gross rent income. After deducting expenditure, you can claim 25%. Other than this, repair and maintenance, any other expenditure. Say if I am doing a renting of my building, I have some sort of expenditure just like security charges. I can deduct, right? It is not for maintenance repair. Rent, any other expenditure. Say I have a separate the office to maintain that one. I have office cost. That also can be done. And repair maintenance is I have to take a code. Whether I am claiming actual expenditure or I am getting this 25. What is the beneficial thing I can do? See? Is that clear? Actually, I apply this section for one person, individual level. Is tax exposure and the actual tax authority has worked out the tax because the particular person, individual has a bank loan to construct that particular building. Interest cost somewhere around 9 million. Right? Of course, that rent income is more than 25 million or something. So once we deducted that interest cost, as well as that 25% relief, there won't be any assessable income. As per my computation. They have challenged that one. They told that you cannot deduct interest if you are claiming this 25%. That was the argument they put forward. Right? So then they have ascertained the tax liability somewhere around 5 million or 3 million, more than 5 million, as per their computation. So then I told that, yeah. So under this is coming under section 52. It says clearly mentioned repair, maintenance, and depreciation. I didn't claim repair, I didn't claim maintenance, I didn't claim depreciation. Therefore, I made that both 25%. And second thing I from my side make the counter argument. So as per the section 12, we can deduct interest cost to the extent that particular borrowing should be used to purchase or the construction of an asset. that particular loan has been used for the construction of the building, right? And for the purpose of section 11, that section 12 is give that extensive definition. How we can claim. So section 11 says in calculating the person business or investment income, both. Either business or the investment income we can deduct. Right? Then we want the actual case. Tax saving that, and as per that one, tax saving is more than 5 days. And actually, I mean, correctly in the beginning, I mean, you are confident of that one. You can keep the confidence, you can challenge. And in that particular case, we didn't claim that actual expenditure. If we claim that particular expenditure, there is no room to claim that 25%. So meaning here is either you have to claim 25% or actual expenditure. So it doesn't mean you can change. This year you can claim actual, next year you can claim 25%. And every year you are not having repair cost for the maintenance. Of course, maintenance may be repair is in and out, right? But every year you are getting back. Right. So next one is an individual who has acquired a solar panel to fix on his premises and connected to the national grid. Rupees 600,000 per year, up to the total expenditure on such solar panel, or up to the amount paid to a bank in respect of any loan obtained acquire such solar panel, we can claim. That is actually for the solar panel, solar mainly. Condition is it is also for individual. Right? Remember, it is also for individual, and it should be his premises. That means if somebody, some individual is fixing his solar in a business premises, they cannot claim that. His premises means is residential. It should be residential limit, right? And also, it should be on grid of on grid. This should be connected to the national grid. Otherwise, you cannot get that, right? And up to 600,000 per year we can claim, right? Even his own cost of depending out of his pocket or even loan. Up to the full cost you can claim, but for a particular year it's limited to 600,000. Right? Balancing that is give a hint there. Balancing you can carry forward and claim in next succeeding year on the same limitation. Up to 600,000 per year you can claim. Okay, clear? Any question? Right. So then you know that, right? So total assessable income we can deduct qualified payment and delay, then taxable income. So then apply the tax rate and work out the tax liability. Right? Any question? The company registered bring from my name. That particular individual is having a bill. He is renting out to that particular individual to the company. Our company is having a building. Okay, then that company has given that apartment to another person, individual. For the accommodation purpose, right?
Yeah.
They are not compared, right? Okay, sir. Oh. No, practically, if it is more than like in case of the simple income, if the other income means less than that thing, anyway, simple income would be one percent. Otherwise, then the rate is solar. So in case of the okay, he's asking question. Okay, you give the answer, right? You give the individual. So say individual, he has an apartment or whatever, the building. He has sold that one. At the selling point, he has to pay capital gain tax. So within 1 month, 30 days from the disposal month, he has to pay capital gain tax. He has paid that capital gain tax. Then can we take note that what the disposal gain when we work out the total income? No. Then how we can work out that? So individual, right? You are referring individual. Okay.
Capital gain tax is a final tax.
Capital gain tax is fine. Who told? For final withholding, only final withholding. Is it a withholding? Last week we discussed. This is not withholding. He has to go and pay. It is assessment based tax. It's not installment based tax. This is assessment based tax. Assessment based means we have to submit the capital gain return, and based on that thing we have to pay. That is assessment based tax. So can you claim any exemption? Yes. Yes. Okay. Under exemption have we discussed? So then there is no exemption. So how is then coming? Disposal of the building. Disposal of a building coming under the assessable income from investment. This is investment income. So then we have to work out the total assessable income. Right? Thereafter it says we can deduct qualifying payment and relief. Under relief it says especially if there is any capital gain, you cannot deduct 1 point on the relief. That is not entitled. You cannot deduct. Then it is coming again under the taxable income. So then what is the taxation? So assuming no any other income. He has only that during the he has disposed that building and he got an gain which is we recognize as capital gain, right, which is part of investment income, because under the assessable income from investment we discuss disposal of investment assets. Right, that is also considered the investment income. So then we work out total assessable income comprise only that gain from the disposal of building, and we cannot claim that 1.2 million was the relief, no any other deduction. So then same income came recognized as taxable income. Okay, then how we can work out the tax? Then taxable income is taxed at 10%. So then 10% already we paid. That's the way, yes. So we didn't discuss tax rate, but I told that tax rate is there, right? When we discuss the investment return, taxable income is comprised only for the investment income, which is representing disposal of investment asset over the capital gain. It is taxed in Sri Lanka at the rate of 10% because of the individual. So then we work out the tax 10%. We deduct tax payment 10%. That's the way the taxation with the format of the taxation. Right? Any question? Okay. Right. In that we can conclude that limitation. Question, friends, you are joining with me remotely. No. Only, right after class today.